Good evening, everybody. So welcome back. I had quite a few questions recently, last few weeks, on the YouTube channel and even on Instagram as well, where people have asked, what's the relevance of an inside bar? You know, why do I have them marked out on my chart? As you can see, my upward candles are sort of like, off-white. My downward candles are off-black, just to make it nice and clear to me. But then I get these red candles in between, and these are just inside bars. So to answer the first question, the indicator is just inside bar ind/alert. Okay, there's quite a few indicators that you can get, so just type in inside bar. Oh look, there's a strategy as well. If someone wants to use that, you can use this one. I think I used to use this one in the past. It doesn't really matter as long as it shows up an inside bar to indicate an inside bar. You just want to be able to spot them. Now, the second thing is I don't use this anymore. I used to use this with a particular sort of trading strategy until I got into really understanding market structure a little bit better, maybe perhaps over the last sort of 18 months or so. This is my current chart markup. This is the Euro USD. I'm going to go through my other pairs in a little bit, but if you want, take a screenshot. It might help you in the next couple of days. But the reason why I've got the volume indicator on here at the moment right now is I just want you to look at my theory. Okay, so quick disclaimer. Okay, this is theory. It's not confirmed. I haven't gone and checked with any mates who work at big banks. I have no idea. Okay, it's just a theory, but it seems to play out quite well. Now, you've got to bear with me on this, okay, because there's two main places or three main places where I look for inside bars. Okay, there's key areas where there's going to be an area of interest, potentially an order block like this one here. Okay, and this will couple up with something else as well. I'll explain in a second. This one over here is going to be interesting. Probably include that wick up there, but because it's an inside bar, it's going to be interesting. We've already had a strong, well, that's been taken out. This one got taken out quite easily. This one, pretty much equal lows. This one got used right there. This one got, I think, did that get mitigated? Looks like it didn't. Just about didn't. This one did. Okay, I could go on for ages, but I'm not going to. I won't waste your time just filling out loads and loads of areas where an inside bar is mitigated as an order block. Okay, but the reason why I've got the volume on the chart is to explain my theory around it. I think that inside bars, largely, when you've got a trending market, let's say this market, for example, where price is going up, I think that the inside bars are retail traders basically going in the wrong direction of the market. Now, if you understand the theory of liquidity in the market and how liquidity works, essentially for a bank to be able to move, a bank or a big institution, for them to be able to move the market, they generate something called a whipsaw, generally speaking. So on a smaller time frame, or any time frame, you saw it in Euro USD throughout December, you got price moving in like a bit of a sideways market, and then you get your intended breakout. Okay, so price gets to here, you get your breakout, you think, way, we're off to the races, okay? Then what happens is price shoots off in the opposite direction. So these guys are straight into drawdown. Quite often their stop losses are hit. The guys on this opposite side start entering into their trades to go south. And then what happens is the market takes off in its true intended direction, which was originally, in the same sort of direction as what these guys wanted to do. But their stop losses are typically not big enough, so they can't survive this drawdown. They get cut out. So you'll have liquidity up along here, which needs to be grabbed to be able to drive the market down south. Liquidity, which has been formed under here, gets grabbed again. And that's what pushes the market all the way up. Now, somewhere around here, or here, or here, or there, is going to be quite often, not always, but quite often, inside bars, which leave order blocks, okay, largely. Now, the inside bars, I think, personally, because you can see the volume drop off, I know that this is just FXCM as a data feed. There's others like Forex.com, Oanda, etc. I don't tend to use all of them, just Oanda for my chart testing. This is my live chart, but I think that this is retail traders going in the wrong direction, especially this one, for example. Okay, so price has created its sort of formation to squiggle around and turn its way around, okay? You have a strong push up and then a bit of a push down, but price starts retracing, okay? I'm looking specifically at this black candle now. So price is working its way down, you get a couple of inside bars, people exiting their positions. The ones who have ridden this journey all the way down, they're like, excellent, sweet, we're at, probably some sort of order block over here. Some sort of interaction, yeah, straight away, you can see, okay? So we've got another inside bar in the journey up. So, there was stuff happening over here. Let's just draw this on, just to help the theory. Here we are. So we'd hit our area of interest. The guys who were on this journey all the way down, they're cutting their trades. And it enables these little inside bars because there's still people wanting to go short. The people who are quite wise are starting to release their trades, okay? There's not massive volume coming into the market at the moment. There is a little bit, like the volume is increasing on these candles here, but then when we get to the inside bars, have a look at this. So let's put the indicator back on. Pay attention to just next to the indicator. It actually shows you the volume. Now the volume, I believe, is actually just the number of trades. It's not the actual value of the trades. I think it's the quantity. Okay, so if with that as a theory, this candle was 60k, this candle was 65k, that candle was 23, this little candle was 12. That one was 13, and so on and so forth. So the candle sizes increase, or the volumes increase, okay? But the thing is, with the inside bar, is that the volume is actually really, really small, which is why I think that it's the retail traders either exiting their positions or getting involved in the wrong direction. So all you do is you go back to the theory of a whipsaw effect. Okay, so everyone thinks that price is going to go up around here. Of course it is. Yeah, price is going to go up. You've hit an area of interest for whatever reason, it's got another inside bar, whatever it may be. Then price comes back down a little bit beyond, like here. So inside bar, price comes down a little bit further, price goes up, works its way through. This candle at one point looked like a massive doji, I'm pretty sure. Then price worked its way all the way down and then mitigated the rest of these retail traders. So it's literally just done this, okay? Price has literally just kind of done this, worked its way around for a little bit, broke up, which was really good. So everyone's getting excited once price comes up to here. And then what it does is it works its way down, mitigates an inside bar order block, and then just really shoots off in the intended direction. Okay, so this move would have stopped a lot of people out, but it had to mitigate these retail traders. Now let's try and find another example. Let's use this for an example, okay? So this is something which happened only a couple of weeks ago now. Okay, time flies. So we had price dropping down quite rapidly. Okay, so those of you who trade the euro, you remember this, where there was a big old gap over the weekend, just as the war was announced with Russia and Ukraine. And then we had, price basically just tumbling. It was a case, almost guesswork of where it was going to end up, but basically we ended up somewhere where we haven't been for about, 2 years or so. So there was a bit of an indication as to where price was likely going to reverse. But what we had on the way down was bearish candles coming down, an inside bar. Basically, retail traders at this point, prime example, absolute prime example. Let me clear this stuff off the chart. We had a wick drop down, a wick down. Okay, so people are trying to exit their positions. There's a lot of bulls coming into the market at this stage. Price comes down, we get a break below these two. So let's just draw this on here so you know what I mean. We get a break below those two. Then what we have is a lot of people just selling their positions because it was very uncertain at that time for a lot of people. They weren't sure where price was going to go. Price breakdown, they're selling off their positions. So right here was the selling point for a lot of people. Price started coming back up, just exiting their positions and enabling the big boys or the real-time players, people who, similar to a lot of you watching this and myself, and let's say more educated traders or bigger institutions, to say, right, okay, it's now pulled back to about 50% of this candle. It's going to continue its journey down. So what happens is that these retail traders, or people just exiting their positions, people looking to start buying now because they see this as a wick and think like, yay, wick rejection. They get involved. They start pushing the market up, and then what happens? Market just crashes down. The same thing happens again. Okay, so inside bar within a wick. Okay, so price is being pressed down, which is great. Not enough trades coming into the market to really influence it. Price comes down again, massive move down. People are selling off their positions, an inside bar is formed. Some people are starting to try and get involved in the market, so an inside bar and a small push up, just indicating that retail traders are trying to get involved there. So what happens, again, similar to that Wixor, what I was saying, people are expecting the price to go up. Institutions are now saying, yeah, it's time that we start moving the price up if we can, based on all sorts of liquidity and what we saw over here, all the way over there. So what do? They push the price down further, get all these guys on the wrong side of the market, push it up a little bit, tease them, get them out of their positions. People who have held that drawdown somehow, sometimes themselves as well, just holding their own drawdown, getting out at break even. It comes up, presses it down further, gets everyone into panic. The retail traders are going to be selling down here. When I say retail traders, I mean generally less educated traders. I don't mean that disrespectfully. So let's see if we've got any inside bars down here if we drop down to a lower time frame. Pretty sure that we will have quite a few, Let's drop down to a 5 minute. Well, there aren't any now that I've done it. But there's going to be a lot of retail traders trying to push the market down. And the big boys are basically absorbing as much as what they can off of these inside bars, which is what I think anyway is the retail traders going in the wrong direction, and it's providing market liquidity to be able to push the market back in the opposite direction. Okay, so inside bar is being formed there. It's people trying to exit the positions. So my indication to me is once we've got a break of structure, if we get an inside bar, I'm expecting that to be broken at some point in the near future. So what happens? We break it next candle. Cool, no inside bar, nothing to do. There we go. Inside bar forms, just go in the opposite direction. Okay. And then again, so opposite direction, whipsaw, straight down again. What happens now? Inside bar forms, price is going down. What we're going to do, probably go up. Boom. It's just dead simple. Inside bar forms, go down the opposite direction. So down first and then up again. Slowly. But yeah, simple as that. Let's see if we can drop down to a lower time frame, see if there are any inside bars to capture here. Yeah, so we just had, for example, an inside bar used as a bit of an order block here. Did I take this trade? Yeah, 7.45, yeah I did. So yeah, inside bar formed off of here. Well, pretty much more like that. Another inside bar was formed right here. I was watching this today and I'm so annoyed that I didn't take advantage of this trade. I've been watching this for a few days, probably about a week, and I'll show you what happened, for example. Let's just skip off of that. Now, it was here, which I was talking about. Drop down to the 15 minute. A good old inside bar. Yes, we got a wick. I'll try and move this out of the way, make it a little bit cleaner. We got a wick right here, okay? I identified the inside bar as retail traders stuck down there. A lot of people got out, which is good. There's going to be a lot of institutional orders with the 2 wicks. Theory, again, it's not gospel. This is just my theory, how I've learned the markets. What happened earlier today, this morning, came down, tapped into it, which is great. So we tapped in on the discount, just tapped the discount. Where was the discount? Right in the middle of that inside bar, okay? And that was the market reversal point for today. And it looks like we're working our way back up again. Okay, so all looking good. Look at this inside bar. So where do I think that price is going to go next? Well, probably down and then up. So, just a theory, but inside bars are quite useful in my style of trading. Again, it's all theory, it's why I use them. I'm still perfecting my use of them. I love it when I see an inside bar in a trending market. So market going up, little inside bar, market going up again. That inside bar, definitely I am targeting that as my next order block to follow the market back up. Okay, just love seeing inside bars which get taken out by the very next candle, because I always use that as an order block. And then again, if you've got an inside bar, let's say that it's a reversal in the market rather than continuation. If you got, let's say, it could just be a clean cut reversal. It could be an inside bar like that. Price come into it, just sort of tap it a little bit, and then off it goes. Pretty sure at some point when price breaks a level of structure, it's going to work its way up. Use this as some sort of like, I don't know, I hear people calling it inducement lately, but basically like an incentive to come back up to that inside bar and then shoot off in the opposite direction. So a bit of a strange pattern for you. I'm still trying to perfect these, but you know, using my back testing results and my forward testing, which I just want to make clear as well. I get a lot more stop outs in my forward testing. So actual live trading than what I've been getting with my back testing results, just to clear something up as well. You know, I don't want to try and wow you guys to such an extent where you think, wow, this guy is an ultra level guru. I'm not. You know, I'm still learning my craft to a larger extent. 100 times better than what I was maybe 2 years ago. But you know, I still feel like I'm never finished, if that makes sense, in terms of my development. You know, always a chance to improve. And if you've made it all the way through the video, just want to say thank you. Hopefully I've cleared up a few questions for you, or a few thoughts that you had, and you know, hopefully you've been able to put up with my voice as well. You know, having I think it's tonsillitis. It's not good. I had COVID at the start of the year, tonsillitis, sinusitis. You know, that's from somebody who's generally fit and healthy. It's just been a tough year. But guys, again, thank you so much. You know, thanks also, just real quickly, showing interest about the training course. I am so far behind in its production. It's really frustrating me, largely due to my illnesses. Some of it is due to not having the correct environment at home to be able to record the videos properly. So I am very far behind with that. What I might do is release a basic course, like a very basic without the community. You know, obviously, probably a one-off price, if that makes sense. So, you know, once you pay for the course, you've got it, rather than like an ongoing monthly where there'll be a community. But I'll give you a couple of strategies which I know work, and I'll give you, you know, a couple of years of back testing data to prove it, you know, and you're more than welcome to it. And it won't break the bank. You know, I want to give back as much as I can, while at the same time continuing to grow myself. So again, you know, thank you very much. Feel free to reach out on Instagram or YouTube. If you do reach out on YouTube, it really helps your algorithm. I'd like to grow the channel if I can. It's a bit of a creative outlet. Guys, I'll leave you to your evenings, and speak to you soon, all right? Cheers.